The clock is ticking, and if you're watching this right now, you need to understand something critical. The window of opportunity that's been open for the past few months is about to slam shut, and when it does, the price you're seeing on your screen right now will look like an absolute bargain. I'm not being dramatic here. I'm looking at the same data the big institutions are looking at, and what I'm seeing is a convergence of factors that happens maybe once or twice in a generation. Let me walk you through exactly what's happening behind the scenes, because this isn't just about charts and technical levels anymore. This is about a fundamental restructuring of how wealth is stored and protected in a world that's changing faster than most people realize. Right now, gold is trading at levels that would have seemed impossible just a few years ago. We've broken through resistance levels that held for decades. But here's what most people don't understand. The price you're seeing isn't the real story. The real story is what's happening in the physical market, away from the paper contracts and the COMEX trading floors. There's a divergence happening between paper gold and physical gold that's wider than I've ever seen in my career. When you look at the premiums dealers are charging for physical metal, when you look at the delivery delays, when you look at the amount of metal actually moving out of the vaults, you start to see a picture that's very different from what the spot price is telling you. Let me paint you a picture of what's really going on. Central banks around the world have been net buyers of gold for over a decade now, but the pace has accelerated dramatically. We're not talking about small purchases anymore. We're talking about hundreds of tons being accumulated quarter after quarter. The People's Bank of China has been adding to their reserves month after month. The Reserve Bank of India is buying. Poland is buying. Singapore is buying. Even central banks that historically held very little gold are suddenly building positions. And here's the thing that should make you sit up and pay attention. These aren't emotional buyers. These are the most sophisticated financial institutions in the world, run by people who have access to information and analysis that you and I will never see. They're not buying gold because they think it's going to go up 10 or 20%. They're buying gold because they see something coming that makes them want to own the one asset that's been money for 5,000 years. Now, before we go any further, I want to make sure you have access to something I put together specifically for people watching this video. There's a free guide in the description below that breaks down the wealth protection strategies that thousands of American retirees are using right now to safeguard their hard-earned savings. It's completely free, no strings attached, and it could be the most important thing you read this year. Check the description after we're done here. Let's talk about what's driving this urgency, because understanding the why is just as important as understanding the what. The global monetary system is under stress in ways that most people don't fully appreciate. When you look at the debt levels in developed economies, when you look at the unfunded liabilities, when you look at the demographic challenges, you start to realize that the path forward isn't going to be smooth. The United States alone has debt that's approaching levels we've never seen in peacetime. The interest payments on that debt are now one of the largest line items in the federal budget. And here's the kicker. Those interest payments are being made with newly created money, which means we're in a cycle where debt is being serviced with more debt, and the only way out is either default or inflation. Neither of those options is good for people holding cash or bonds. But it's not just about debt, it's about trust. The dollar's role as the world's reserve currency has been the foundation of American economic power for over 70 years. But that foundation is cracking. When you see countries like Russia and China settling trade in their own currencies, when you see the BRICS nations talking about creating alternative payment systems, when you see oil being sold in currencies other than dollars, you're watching the slow motion erosion of dollar dominance. And every time that dominance erodes a little bit more, the case for holding gold gets a little bit stronger. Because gold doesn't care about politics. Gold doesn't care about trade wars or sanctions or diplomatic disputes. Gold is the ultimate neutral asset, and in a world where trust is breaking down, neutrality has enormous value. Now let's talk about silver for a moment, because what's happening in the silver market is even more dramatic than what's happening in gold. Silver has always been gold's volatile little brother, but right now, silver is setting up for a move that could make gold's gains look modest by comparison. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been compressing. Historically, when this ratio gets out of whack, it eventually snaps back, and when it does, silver tends to outperform gold by a significant margin. We saw this in the late 70s. We saw it again in 2011. And the setup right now looks eerily similar to those periods. But there's something else happening with silver that makes this moment unique. Silver isn't just a monetary metal. It's an industrial metal, and it's becoming more industrial every year. The green energy transition that governments around the world are pushing requires massive amounts of silver. Solar panels use silver. Electric vehicles use significantly more silver than traditional cars. 5G infrastructure uses silver. The electronics in your phone, your computer, your car, they all use silver. And here's the problem. Silver production isn't keeping up with demand. We're drawing down above-ground inventories, and at some point those inventories are going to run low enough that the market is going to have to ration supply through higher prices. When that happens, the move could be explosive. Think about what happened in the nickel market a few years ago. Nickel is used in electric vehicle batteries, and when a short squeeze developed, the price went absolutely parabolic. Trading had to be halted. Contracts had to be canceled. It was chaos. Now, I'm not saying silver is going to do exactly the same thing, but the dynamics are similar. You have industrial demand that's growing, you have investment demand that's growing, and you have supply that's constrained. That's a recipe for a significant price move. And the people who position themselves before that move happens are going to be very glad they did. Let me tell you a story that illustrates why timing matters. Back in the early 2000s, there was a window of opportunity in the gold market that lasted for several years. Gold was trading in the 300s, then the 400s, then the 500s. People who understood what was happening had plenty of time to build positions. But then something changed. The financial crisis hit, and suddenly everyone wanted gold. The price went from 800 to over 1900 in less than 3 years. The people who waited, who thought they had more time, ended up paying 2 or 3 times what the early buyers paid. And here's the thing. Those early buyers weren't smarter. They weren't luckier. They just understood that when fundamental conditions are changing, you don't wait for confirmation. You act while the opportunity is still there. We're in a similar moment right now. The fundamentals are changing. The geopolitical landscape is shifting. The monetary system is under stress. But most people are still operating under the old assumptions. They're still thinking that cash is safe, that bonds are conservative, that the system is stable. And maybe they're right. Maybe everything will be fine. But what if they're wrong? What if the people who are buying gold and silver right now, the central banks and the sovereign wealth funds and the family offices, what if they're seeing something that the average person isn't seeing? What if they're preparing for a world that looks very different from the world we've known for the past 40 years? Here's what I find fascinating about this moment. If you go back and read the financial news from the late 1970s, you see the same pattern. Gold was rising, but most mainstream analysts were skeptical. They said it was a bubble. They said it couldn't last. They said people should stick with traditional investments. And then gold went from 200 to over 800 in less than 2 years. The people who listened to the skeptics missed one of the greatest wealth transfers in modern history. The people who trusted their own analysis, who looked at the fundamentals and made their own decisions, they did extraordinarily well. Now, I want to be clear about something. I'm not telling you that gold and silver are going to go straight up from here. Markets don't work that way. There will be pullbacks. There will be consolidation periods. There will be moments when it feels like maybe you made a mistake. But if you understand the bigger picture, if you understand why you're holding these metals, those short-term fluctuations won't shake you out because you're not trading. You're positioning. You're building a foundation of real wealth that can't be printed, can't be debased, and can't be confiscated with the stroke of a pen. Let's talk about the mechanics of what's happening in the physical market, because this is where things get really interesting. The COMEX, which is the major exchange where gold and silver futures are traded, has been seeing some unusual activity. The amount of metal standing for delivery has been increasing. That means people aren't just trading paper contracts anymore. They're actually taking physical delivery of the metal. And when you take delivery, that metal comes out of the registered vaults, and it doesn't come back. It goes into strong hands, into vaults and safe deposit boxes and private storage facilities, and it sits there. This is what's called a drain on the system. And when the drain gets large enough, it creates stress in the market. Think of it like a bank run, but in slow motion. As long as everyone is happy trading paper claims on gold, the system works fine. But when people start wanting the actual metal, when they start saying, I don't want a contract, I want the gold, that's when you find out how much metal is really there. And based on what we're seeing, based on the premiums and the delivery delays and the amount of metal moving out of the vaults, there's reason to believe that the physical market is much tighter than the paper market would suggest. When that tension resolves, and it will resolve, the price is going to have to adjust to reflect the reality of physical supply and demand. Now here's where this gets personal. If you're someone who's worked hard your whole life, who's saved money, who's built up a retirement account, you need to think about what all of this means for you. Because the wealth you've accumulated, it's not really wealth until you can preserve it and pass it on. And in a world where currencies are being debased, where debt is exploding, where geopolitical tensions are rising, preservation becomes the most important thing. It's not about getting rich. It's about not getting poor. It's about making sure that the purchasing power you have today is still there tomorrow, next year, 10 years from now. This is actually a good moment to mention something that might be relevant to your situation. If you're sitting on $100,000 or more in retirement accounts, there's a strategy that a lot of people don't know about that allows you to move some of that wealth into physical gold without triggering taxes or penalties. It's called a gold IRA, and I've put together a comprehensive guide that explains exactly how it works. You'll find it in the description below. It covers the rules, the process, the pros and cons, everything you need to know to make an informed decision. This isn't about selling you something. It's about making sure you have all the information you need to protect what you've worked so hard to build. Take a look at it when you get a chance. Let me bring this back to the urgency of the moment, because that's what this video is really about. The price you're seeing right now, whether it's gold or silver, it's not going to last. Not because I say so, but because the fundamentals don't support it lasting. When you have central banks buying, when you have industrial demand growing, when you have supply constraints, when you have monetary instability, when you have geopolitical uncertainty, all of those factors push in one direction. They push prices higher. The only question is timing. And timing is the one thing nobody can predict with certainty. But what we can say is that the longer you wait, the more expensive your entry point becomes. Think about it this way. Every day that goes by, more metal moves from weak hands to strong hands. Every day that goes by, more investors wake up to what's happening. Every day that goes by, the supply available at current prices gets a little bit smaller. And then one day, something happens. Maybe it's a geopolitical event. Maybe it's a currency crisis. Maybe it's a default by a major debtor. Maybe it's just the slow accumulation of all these factors reaching a tipping point. But when that day comes, the price is going to gap higher, and the people who waited are going to be chasing. They're going to be buying at prices that are significantly higher than what's available right now. And they're going to wish they had acted when they had the chance. I've been studying these markets for a long time, and one thing I've learned is that the best opportunities don't announce themselves with trumpets and fanfare. They develop quietly, over time, while most people are paying attention to something else. And then suddenly everyone notices it once, and the opportunity is gone. We're in that quiet phase right now. The smart money is accumulating. The institutions are positioning. The central banks are buying. But the general public is still largely unaware or unconcerned. That's the window. That's the opportunity, and it's not going to stay open forever. Let me give you another historical parallel, because history doesn't repeat, but it often rhymes. In the early 1930s, after the stock market crash, there was a period where gold was revalued significantly higher. People who held gold saw their purchasing power increase dramatically, while people who held dollars or stocks or bonds saw their wealth evaporate. Now, I'm not predicting another Great Depression, but I am saying that when monetary systems come under stress, when debt levels become unsustainable, when trust in institutions erodes, gold has historically been the asset that preserves wealth. It's been true for thousands of years, and there's no reason to think this time is different. The thing about gold and silver is that they're not just investments. They're insurance. They're a hedge against the unknown. They're a way of saying, I don't know exactly what's going to happen, but I know that having some of my wealth in real, tangible assets is a smart move. And the beautiful thing about insurance is that you don't wait until after the fire to buy it. You buy it when things seem fine, when the risk seems manageable, because that's when it's affordable. Once the crisis hits, Once everyone wants insurance at the same time, the price goes through the roof and availability becomes an issue. Right now, you can still buy physical gold and silver at reasonable premiums. You can still get delivery in a reasonable time frame. You can still build a position without moving the market. But that won't always be the case. When demand spikes, when everyone suddenly wants physical metal, the premiums explode. The wait times extend. The dealers run out of inventory. We saw this happen during the pandemic. We saw premiums on silver coins go from $2 or $3 over spot to $10 or $12 over spot. We saw wait times extend from days to weeks to months. And that was just a taste of what happens when physical demand overwhelms supply. Now, let's talk about what happens next, because that's what you really want to know. Where are prices going? How high could they go? What's the upside? And the honest answer is that nobody knows for certain, but we can look at the fundamentals, we can look at the historical precedents, and we can make educated guesses. If gold is responding to monetary debasement, if it's responding to loss of confidence in fiat currencies, then the upside is substantial. We're not talking about 10 or 20% gains. We're talking about the potential for gold to reach levels that seem impossible right now. Because when a monetary reset happens, when the system has to revalue assets to reflect the new reality, gold is the asset that gets revalued higher. Silver, as I mentioned earlier, has even more explosive potential because of its dual nature as both a monetary metal and an industrial metal. If silver just catches up to where gold is on a ratio basis, we're talking about significant gains. But if silver also benefits from industrial demand, from supply constraints, from investment demand, then we're talking about the potential for truly extraordinary returns. I'm not making predictions. I'm just pointing out that the setup is there, the fundamentals are there, and the historical precedent suggests that when silver moves, it moves fast and it moves far. But here's the thing you need to understand. This isn't about trying to time the perfect entry point. This isn't about waiting for a pullback or hoping for a better price. This is about recognizing that we're in a unique moment in history, a moment where the old rules are breaking down and new rules are being written. And in moments like this, the people who do well are the people who act decisively, who trust their analysis, who don't wait for permission or confirmation from the mainstream media or the financial establishment. Think about the people who bought gold in the early 2000s. They didn't wait for CNBC to tell them it was okay. They didn't wait for their financial advisor to recommend it. They looked at the fundamentals, they understood what was happening, and they acted. And they were rewarded for that decisiveness. The same thing happened in the 70s. The same thing happened after the financial crisis. And it's happening again right now. The question is, are you going to be one of the people who acts? Or are you going to be one of the people who watches from the sidelines and wishes they had? I want to emphasize something important here. This isn't about fear. This isn't about panic. This is about prudence. This is about looking at the world as it is, not as we wish it were, and making rational decisions based on that reality. The reality is that we live in a world of unprecedented debt, unprecedented monetary expansion, unprecedented geopolitical tension. The reality is that the monetary system we've relied on for decades is showing signs of stress. The reality is that the people who run the world's largest financial institutions are buying gold in record amounts. Those are facts, not opinions, and facts should inform our decisions. So what should you do? Well, that's a decision only you can make. But I can tell you what I would do if I were in your shoes. I would take a serious look at my portfolio and ask myself if I'm adequately protected against the risks we've been discussing. I would ask myself if I have enough exposure to real assets, to things that can't be printed or debased. I would ask myself if I'm comfortable with my current allocation or if I need to make some adjustments. And if I decided that I needed to make adjustments, I wouldn't wait. I would act now, while the opportunity is still available, while prices are still reasonable, while physical metal is still accessible. Because here's the truth. The window is closing. Not tomorrow, not next week, but it's closing. Every day that goes by, more metal moves into strong hands. Every day that goes by, more investors wake up to what's happening. Every day that goes by, the price gets a little bit higher and the opportunity gets a little bit smaller. And one day, you're going to wake up and the price is going to be significantly higher than it is right now. and you're going to wish you had acted when you had the chance. I've seen this movie before. I saw it in the 2000s. I saw it after the financial crisis. I'm seeing it again now. And the people who do well are always the people who act before the crowd, who trust their analysis, who don't need permission or validation from the mainstream. They're the people who understand that in times of change, in times of uncertainty, in times of monetary instability, gold and silver aren't just investments. They're lifeboats. They're the assets that preserve wealth when everything else is being washed away. So let me leave you with this. You've watched this video all the way to the end, which tells me you're serious about protecting your wealth. You're not just looking for entertainment or confirmation bias. You're looking for real information that can help you make real decisions. And I respect that. So here's what I want you to do. Go to the description below and download that free guide I mentioned. It's comprehensive, it's detailed, and it's designed specifically for American retirees who have $100,000 or more in retirement accounts. And here's the thing. If you mention that you watched this video all the way to the end, you'll also get access to a free one-on-one educational web conference. No obligation, no pressure, just a chance to talk with someone who can answer your specific questions and help you understand your options. This is only available to American retirees with at least $100,000 in retirement accounts, and it's completely free. Take advantage of it while it's still available. The clock is ticking, the window is closing, the opportunity is here right now, but it won't be here forever. The question is, what are you going to do about it? Are you going to act, or are you going to wait and hope for the best? Because hope is not a strategy. Hope doesn't protect your wealth. Hope doesn't preserve your purchasing power. Action does. Decisiveness does. Understanding the fundamentals and positioning yourself accordingly, that's what does. So make your decision. Do your research. Trust your analysis. And act while you still can. Because the price you're seeing right now, it's not going to last. And when it resets higher, when the market finally catches up to the fundamentals, you're going to be very glad you acted when you did. Or you're going to wish you had. The choice is yours.